Have you ever wondered which financing option could kickstart your investment journey the fastest? With over a decade of experience and hundreds of rental units under my belt, I'm here to share the options that actually work. Your first investment deal may be closer than you think. Welcome to Strategy Saturday. I'm Charles Carillo, and today we're discussing the best financing options for new investors. Whether you're just getting started or looking to take your next big step in real estate, understanding your financing options is critical. So let's get started. When I began investing in real estate, I was self-employed, which made obtaining financing always a little trickier until I began purchasing 5+ unit multifamily properties, which are considered commercial properties where the lenders base the approval mainly on the property and its ability to service debt versus purchasing a 1 to 4 unit residential property where the lenders base the entire approval on the borrower, mainly their income, savings, and credit score. So let's break down the best financing options for new investors. Number 1, FHA loans. Now, these are perfect for investors purchasing a 2 to 40 unit multifamily property since they can purchase this with as little as 3.5% down payments, but investors must occupy one of the units. This is how I initially became a multifamily investor, by house hacking a 3-unit property and living in one of the units. Number 2 are conventional loans. Now, conventional loans are usually best for investors with consistent income and good credit. And these loans usually require a 20% to 25% down payment. And they generally feature the lowest rates and minimal fees, especially if you go directly to the bank or credit union that's actually lending the money, offering the loan. Number 3 is hard money private lender loans. And hard money and private money loan names are typically used interchangeably, with the central premise being that they are non-institutional lenders. Yes, some hard money lenders access their capital from institutional sources, but this is not what we're talking about here. Now, the beauty of private loans is their flexibility. Many lenders see hard money and private money loans as products only used for flipping properties, but there are many private lenders out there that will lend long term. Now, one of my friends here in South Florida has financed his entire real estate portfolio of about 20 units with one private lender. Now, perfect for investors requiring a quick close and a unique situation and have funds available for a down payment. The interest rates are higher, but it allows you to maneuver faster than other competing buyers. Now, most private loans do not have a prepayment penalty, allowing you to refinance or sell without additional fees. Number 4 is seller financing. Now, seller financing is an excellent solution for investors working with a motivated seller. Now, the benefits is that buyers can create a win-win solution for both the seller and themselves. And the deal structure is flexible, similar to working with a private lender. I personally feel I can pay a few % more for a property with a seller financing deal since I am crafting the lending package and avoiding most of the regular lender fees. The one thing I have realized about seller financing is when advertising a listing, the terms are less than ideal, or the property is overpriced. The best way to achieve a good deal on seller financing is to find properties owned by a seller for, say, 10 to 15 plus years, build rapport with them, and then suggest to them and or educate them on seller financing. It's harder to go through an agent and do this. It's better to go directly to the seller and negotiate and educate them. Number 5 is DSCR loans, or debt service coverage ratio loans. Now, DSCR loans are great for investors who have money for the down payment and have a property that cash flows from day one. Besides the down payment, the lender focuses most of the underwriting on the property and its ability to service the debt. Also expect higher rates on these type of loans. If you want to learn more about the DSCR loans, check out episode SS134 and SS197. Obtaining a loan will be much easier if you have a job. If you're self-employed, lenders will require 2+ years of tax returns. Many self-employed people make excessive deductions, decreasing their income and making it more challenging to be approved for a mortgage. It also does not give you an accurate picture of your company's profitability if you deduct personal expenses through your business. If you have good income, good credit, and a down payment, obtaining a conventional loan will usually be the least expensive option. You can go directly to a local bank or credit union to obtain the loan. There's no need for a broker. If you do, however, find yourself in a unique position where you don't know and you don't check all the boxes, it might make more sense to reach out to a mortgage broker to provide an honest assessment of your situation and help you get pre-approved for a mortgage. I hope you enjoyed. Please remember to rate, review, subscribe, send me comments and potential show topics at globalinvestorspodcast.com. If you're interested in actively investing in real estate, please check out our course and mentoring programs at syndicationsuperstars.com. That is syndicationsuperstars.com. Look forward to 2 more episodes next week. See you then.
If you always want to invest in real estate but didn't have the time, didn't know where to find the deals,
couldn't get the funding, and didn't want tenants calling you? Since 2006, I've been buying income-producing properties in great locations that provide us with consistent passive income while we wait for appreciation in the future and take advantage of tax laws while we're waiting. And unlike your financial advisor, we invest alongside our investors in every property we purchase. Check out investwithharborside.com. If you like the idea of investing in real estate, if you like the idea of passive income, partner with us at investwithharborside.com. That's investwithharborside.com.
Nothing in this episode should be considered specific, personal, or professional advice. Any investment opportunities mentioned on this podcast are limited to accredited investors. Any investments will only be made with proper disclosure, subscription documentation, and are subject to all applicable laws. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice. Opinions of guests are their own. Information is not guaranteed. All investment strategies have the potential for profit or loss. The host is operating on behalf of Syndication Superstars, LLC exclusively.